Okay, thank you everyone, and welcome to the AZA live webinar. Boason, Omofaye, and I have the pleasure of welcoming everyone to this 1 hour programming put together by AZA. Of course, the good news on a relative basis for Africa is that we have seen lower infection rates of the coronavirus pandemic compared to other parts of the world, although the infestations are now rising according to the Africa CDC latest numbers. But we hope the numbers stays relatively not as high as we seeing it on a daily basis across the Western Hemisphere, Europe, United States, North America, and parts of Asia. But so far, there is no room whatsoever for Africa to be complacent. We've heard from President Ramaphosa of South Africa and the Kenyan President Kenyatta over the last 1 week on the reasons why Africa needs to stay focused and not be complacent as far as the coronavirus was concerned, because the economic toll on the populations of Africa, just about 1.2 billion people, will be far more higher than in other parts of the world. And the reasons were simple. First, our continent is poorer, and so we feel the pinch more. Logistics, healthcare, infrastructure, and all of that are major pressure points for the continent. And second, the continent is more challenged logistically, and that takes us to the point of this particular webinar, the supply lines in the COVID area, opportunities in disruption. Of course, it can be a whole lot cheaper, and everyone knows this in the news, shipping a crate of tomato paste 10,000 miles from China to Nigeria than 100 miles across Nigeria from Kano to Lagos, which is just approximately 500 kilometers away, just to use one example. So our already challenged supply routes, logistics, infrastructure around all that have become more pronounced as a result of the COVID-19 pandemic. So I am happy to have this afternoon on the webinar. We're fortunate to be joined by a panel of people who are solution finders, creating opportunities in disruption, and build back better on the continent. Build back better. Hope I'm not going to get, those are my words. I hope I'm not going to get sued for plagiarizing Joe Biden's line just at the elections. Build back America better. But we need to build back Africa better, as it were, in the manner of speaking. So welcome, ladies and gentlemen, dear participants. Dimieari Kemedi, the co-founder and managing director at Alluvial Agriculture. He wrestles daily with the problem of how to get essential inputs like seed and fertilizer to remote areas and smallholder farmers across Africa in Nigeria and make sure they deliver to markets on time. Thank you so much, Vaughn. It's good to see you again on this webinar. Thank you. And supporting Alluvial in this endeavor, of course, $20.4 million recently announced by Mastercard Foundation COVID-19 Recovery and Resilience Program. We're delighted to have Louis Sankey on the program, who is the program lead for agriculture program at Mastercard Foundation. Louis, it's good to see you on the program. Thank you. Thank you, madam. And of course, beyond agriculture, we're looking at the broader realm of trade. If you saw the numbers 2 days ago, on Monday to be precise, from Afreximbank, total assets, the doorstep of 30 billion, of about 20 billion US dollars, growth of about 34% over the last 9 months, January to September this year. And you look at the whole the support that Afreximbank has been given to African sovereigns and institutions under the pandemic, in particular since April this year. Then you know why we have Ibrahim Sagna here, the head of advisory and capital markets at Afreximbank based in Cairo, Egypt. Thank you so much, Dr. Sagna. It's good to have you here on the show. And finally, Sukhi Srivastan, thank you so much, Africa's largest non-bank currency trader. I'm delighted to see all of you on the program. Thank you, Sukhi.
Thank you.
So let's get the show started. I'm a senior consultant at New Markets Media and Intelligence. What we do is work with researchers, media, organizations, governments, and businesses to increase their understanding of business activities in frontier and emerging markets. So let's get everyone's thoughts and questions in, as usual, through the platform. We use the Q&A function. Please use that if you want to chat with us. We'll take much time to do that within the next 1 hour and get everyone's point in. We also have journalists on this particular webinar, also we appreciate your questions as well. Everything is being recorded for broadcast. So let's begin with Vaughn, Dimieari, the man who gets the handshake with the farmers on a daily basis. Tell us about your work with smallholder farmers in Nigeria, in particular the northern part, the north central to the northern part of the country, where you face a whole lot of issues around logistics and all of that, but also in particular in terms of kidnappings, banditry, and insurgency and all of that. You have the floor, Vaughn.
First of all, I think everybody knows that banditry, kidnapping, insecurity generally is a threat to economic activities, including farming. But at the same time, economic activities are also a threat to insecurity, or more positively, a solution to insecurity. So in spite of any challenges, we just have to be in there working with the farmers to increase the level of productivity of the country from the agricultural angle, so that the country is able to then deal with issues of insecurity. One of the things that we have found out, actually about 14 days ago, I was in Niger State, and it was quite interesting that in one of those communities, the villagers, the farmers, they used to lease their land in the dry season to people who come from other parts of the country. Interestingly, they actually said people who come from the northern part of the country, but there I was in Niger State. And the reason they now want to go back to planting in the dry season is that the rainy season is no longer predictable. It either comes with drought or it comes with flood. So they now want to gain more certainty by using relatively inexpensive tube wells to provide water for their crops. So people are really, I know we're talking about COVID here, but the ingenuity of farmers now looking at more climate resilient measures for meeting their needs, it's simply amazing. And this has further been enabled by the challenge they faced with COVID-19 around supply lines. There was not as much farming 2020 as last year because of the supply line challenges around the interstate blockades that happened in March, April, which was in fact the most critical period for transporting equipment and inputs to farmers. Never mind that special dispensation was given for agricultural inputs, but the challenges were still experienced. And then unfortunately, in places like Kemedi that are very central to rice production in Nigeria, they had very serious floods. So that has made this year's dry season to be one of the most important dry season in the history of farming in Nigeria.
So when you talk about supply issues and all of that, what type of inputs would you be speaking to specifically, and how do you try to navigate these logistics issues?
So, for instance, fertilizer is a critical one. Not all the components of fertilizer are made in Nigeria. There was a fear that there might not be enough fertilizer, but I think the government did a great job coordinating with fertilizer blenders to make sure that fertilizer was available. However, it was not available for the advertised price. So that impacted on farmers as well. And when you look at the price of various grains right now in the market, it's really, really scary. You wonder how people are managing at the end of the day, because paddy rice, for instance, right now is over 200,000 naira per ton, up from about 120 last year. So that's a very significant increase in price, which will be passed on to the consumers at the end of the day. So fertilizer being one, seeds are the other category of inputs inputs that needed to move to farmers, but were impacted. What that means is that some farmers will probably simply plant the grains from the previous year, which they normally do anyway. But in this case, they will do more of that, and that will impact on yield. And so we talk a lot about COVID-19, but let's not forget that this year, COVID-19 impacted on farmers, floods impacted on farmers in some places as well, and drought also impacted on farmers. In some parts of the southwest of Nigeria, there were almost 50 days of no rain. And this is so wicked because it happens shortly after people have planted. You know, you plant, if they did not plant, probably they will have waited until the drought was over before planting. And even if they did that, they will still not then have enough period of rain for the rest of the year. As you can see now, we are in November, and the rains are not coming as they did last year. Last year, as far into the year as early December, it was still raining. But right now, it's not raining. So this has been a very difficult year for farmers. And even with the support that we have from Mastercard Foundation to support farmers, it's still being done under difficult circumstances. So you can now imagine what will be happening with farmers that have no support at all. Look at the finance sector. For you to finance farmers, you need to visit, you need to do a lot of due diligence. All of this was supposed to be done between February and maybe April at most. And again, this is the period that coincided with the lockdown. So a lot needs to be done. And if Nigeria is to survive the coming food crisis, we really need to plant massively during this dry season. And unfortunately, dry season farming requires a little bit of infrastructure, which is expensive, takes time to put in place as well. But I really salute the farmers who are using this relatively inexpensive method called tube wells to prepare for the dry season.
Very interesting, Vaughn. And I think to an extent, you're speaking to a number of regions in Africa. For example, in Zimbabwe, it's been very tough with drought as well. And we've seen interventions into the country's agriculture by Africa's risk capacity insurance and a few others. I'm sure Afreximbank is taking all of this on board, again, looking at what the interventions are across the various regions of the continent. But let me ask Lois at Mastercard Foundation, in terms of the support you're giving, and thank you very much for bringing Mastercard Foundation into helping food supply, food sustainability, and building back much better agriculture on the African continent. Number one line of issues to be fixed: a very huge young population, the hunger at the belly, and of course the brain is a whole lot more digital. You need to get the two together. So Mastercard is both digital and again making sure that the stomach is well fed. Talk to us about your support under this COVID-19 program that you have in place.
Unmute yourself.
Just unmute yourself, Lois. Just use that little button down there.
Sorry about that. Thank you, Boason. Thanks, Vaughn. So as a foundation, we are focused on supporting entities across different countries in Africa to create what we call dignified and fulfilling work for young people, mostly young men and women within the age of 15 and 38. So that's our goal. And agriculture presents a very veritable channel that already engages a huge population. And so channeling our support through partners like Vaughn, Alluvial, and others enable us to channel funding that will help them bridge the financing gap and that affects them in the ability to provide these very critical inputs to farmers. And so our support is geared towards aggregating as many young people as possible attracting them to agriculture, which provides a means of employment, engaging them, also preventing them from being distracted into insurgency and banditry, etc. So it serves as a very, very good platform for us to support the overall drive towards food security, towards job creation for young people especially, and women in particular. So that is the focus of our support. And we are happy to have a significant number of partners, and we have a long list of other partners we're working with. Our hope is that by the end of every year, we would have been able to walk through various partners to activate a lot of work and entrepreneurship in agriculture. And over the next 3 to 5 years, be able to show significant impact through the various important value chains. Thank you.
So in terms of the supply chains you're talking about, Lois, just a very quick question. In many countries are you working right now, and how does it really work in practical terms, working with Alluvial, for example? How do you make this funding work in practical terms?
We're working in several countries. Nigeria is one of the most recent additions. We're working in Ghana, in Kenya, in Rwanda, in Uganda, Ethiopia, and Senegal. So each country has a country head and a team. And the agric is a common theme across all the countries. And then there are other thematic areas. For Nigeria, specifically, agric is supposed to account for 70% of the work creation that we want to achieve as a foundation. And our target for Africa globally is 30 million jobs, and Nigeria shares 10 million out of that over the next 9 years. And so that gives us about 1 million jobs per year, and agriculture is supposed to contribute 70%. So practically what happens is an Alluvial is going to be working with, going to be aggregating 65,000 farmers across about 8 states, across 3 or so value chains: rice, corn, soy. And the idea is in this 8 states and 3 value chains that Alluvial has chosen to focus, these are very valuable value chains. Rice is a food security value chain. Soybeans is a feed value chain. Corn crosses both food and manufacturing. So these are very viable value chains. So if we're able to impact through Alluvial alone 65,000 farmers, prorate this, give them inputs, give them, some of them will have mechanization for their farms, pesticides, and then market is guaranteed. These farmers don't need to go anywhere. Alluvial is going to organize everything. It's an end-to-end intervention, from land preparation to inputs to capacity building to market. So this takes care of a lot of things. In addition to that, we are also infusing financial inclusion methods into it. So Alluvial is working with another partner to bring in wallets that will incorporate these farmers into the financial system. So like I said, it's very practical, it's hands-on, and it's end-to-end. At the end of one season, any of the farmers that have been covered under that platform would have been properly structured to be able to stand on their own for next season. And then you move on to the next batch. And then this creates a ripple effect in the value chain and in the ecosystem.
As a matter of fact, I would like to add to what Lois has been able to clearly explain. This project will produce 260,000 tons of grains to add to food security in Nigeria. That's a very significant number. That's about 8,666 30-ton truckloads of food that this project will be producing directly. It will yield revenue of $72 million to these 65,000 farmers collectively. And it will also, as Lois has mentioned, bring them into financial inclusion. Because what's happening with the project is that it enables we are registering them with banks as well. And so the banks see that they are able to execute and that they are able to make a tiny repayment, which builds a comprehensive financial history credit history for them in readiness for the post-Mastercard phase. And in fact, we will soon be announcing, actually much earlier in the day than I had expected, the financing that is already waiting for the farmers after this Mastercard Foundation catalytic stage.
Yeah, thank you so much, Vaughn. And, I'm just checking the press statement from Afrexim Bank, which came in this morning on the Afrexim Bank Commodities Index, the AACI, and I'm looking at the third quarter report, which was released, which shows that the agricultural commodities sub-index rose to become the top performer in the third quarters, outstripping gains in base and precious metals. This is Afrexim Bank latest numbers, which was released just a couple of hours ago today, showing that to give some of the testimony to some of what Mastercard is doing, and as well as Alluvial. Thank you so much, all of you. Let me bring in Ibrahim Sagna from Afrexim Bank, who will be speaking to us about some of the challenges that you are seeing from Cairo, Egypt, looking down across the continent, and the solutions that you're bringing to the table. Again, taking out a bit from that latest numbers that your commodity index pushed out this morning. Dr. Sagna?
Thank you very much, Boason. It's a pleasure to be here and to be members of this esteemed committee of colleagues. Clearly, the crisis has been a prominent one, but I think it is important to highlight that a bank like ours is conceived to rise to the occasion. So a crisis is never wasted in our history. In 2014-15, when there was some contraction, we did the commodity crisis of that year was met with about $10 billion of disbursement from our bank. That was in 2015. This year, 2020, as you've heard from the numbers a couple of days back, we've been able to see our balance sheet grow 34% and currently at $19 billion, when last year we were below 15. So within this year, we were able to put together a program called Patimfa, which you've heard about within the second quarter of this year when the crisis just started, where we dispersed over $3 billion. In fact, we ended half of the year dispersing $5 billion across the continent around these issues we've discussed today, always anchored around pandemic and the crisis. And recently, this quarter, we've moved our effort as an institution to a collaborative plan called COPREFA, which is between us and ITFC, which is linked to the Islamic Development Bank, and Badea, where we basically put in place a facility of $1.5 billion for specifically the import of medical supply, agriculture equipment, fertilizers, and the pressing food security issues. So the issues just raised within this panel is what this facility has been put to resolve. During the year, we also had a African medical supply initiative with the African Union and a few key parties to really provide a rapid response. What we need to realize collectively is that on the continent, we had been expecting a health crisis that would have triggered a financial crisis. The health crisis pretty much never arrived. It was a bit like the announcement of the victory of Trump. We were expecting it, it didn't come. So that health crisis didn't come. You have 41,000 deaths across Africa. It's 54 countries. You do 41,000 deaths divided by 54 countries. You compare it to any other country. That is basically not a crisis. Many of us have lost some close ones, so the disease is real. It is still having some damage, but on a comparative base, the continent through its leadership has shown a great example as a geography and as individual countries. I don't think there's any other continent that has sustained the crisis the way we have, and we should all be proud of our action individually and as geographies. This is one of the rare cases where the globe needs to look towards us to take an example. So since that health crisis did not occur, the downside of the story is the financial crisis came. So the consequence we were expecting came despite the absence of the cause. And that's why institutions like ourselves needed to be here. And a crisis is always an opportunity for innovation. Irrespective of the industry where you sit in, you realize that in time of constraint, that's where creativity comes to the occasion. And you will see that in the agricultural space, a lot of that took place, as you've heard from my colleagues, but you observe that that has happened across sector. And that's what we are really should be observant collectively to see. And you've heard some great stories happening even on the logistics side by a company in Nigeria called Kobo 360, which is really serving as an Uber for logistics. There's another company operating in the same space called Lorry that is doing the same, both in Nigeria and Kenya. You also have on the payment space, you have a company called Paystack that did manage to get investment of a large quantum from the largest American player in the space. So clearly you can see that at the height of this crisis, there are phenomenal stories coming up. And what you're observing is a change of behavior. And that's what crises are for. It allows individuals, institution, and nation to look inward and seek new paths, change old habits, and find new directions. And what you're observing in our space is financial institutions like ourselves are collaborating with other DFIs to create new platform. We have spoken about the African medical supply that we've put in place with the AU, but we're putting together a hospital center of excellence in Nigeria to really respond to the health crisis, which is a project we've been working on for a long time. And we're basically providing the equity and the debt. It is a platform we're erecting on our own and inviting other equity and debt providers. The other thing we're doing is we're putting together a settlement platform, which basically will solve a lot of the settlement issues that some of you have spoken about, and that will become more pronounced in the coming year. As you may observe, many of the African geography have seen their GDPs retract, not 20%, not 30%, some divided by 4. I mean, in terms of projection on IMF, the number of January and the number today is divided by 4. That is not a decrease. That is a collapse. So in light of that, it is important to realize that working capital will continue to be an issue across industries and sovereigns. So what we need to remember is the continent has only 2 types of countries: export-oriented countries and non-export-oriented countries. The non-export-oriented countries, fundamentally, many of them are relatively poor, and those that are not poor are reliant on the informal industry and the informal sector. That informal sector was locked down. When they're locked down, there's no activity. When there's no activity, there's no revenue. When there's no revenue, there's scarcity. When there's scarcity, there's working capital issue with individuals and with the sovereign. And that's what we've been assisting to, is providing lines to many of these countries who are member shareholders of our bank. The other side of citizenship in the continent are export-oriented countries. And those countries, when trade froze, commodities price collapsed, revenue disappeared. So that the same issues that the other segment of the continent face, those same countries face. They've seen their GDP collapse, they could not export, there was no more revenue. So across the continent, you have dislocation. It's not only individuals, it is all the way up to the sovereign. And what needs to happen is really, really innovative ways to solve the upcoming challenges that are coming. And as you have seen with the health crisis, the continent is resilient, and more with the continental free trade, the continent is realizing that it is crucial to have solutions from the continent. Stop trying to find health solution by going overseas. Stop getting manufacturing products from overseas. The solution is on the continent. The resolution for sustainability is intra-Africa trade. It's not continuing to import from a soil that is not yours. It is finding the solution at home. It is having homeborn solution. And that's what we believe is going to continue to occur. And that will be a critical segment of building the century of the African millennial. We are confident that what you've observed in Asia in the past 60 to 70 years is about to happen on the continent. And crises like this serve as the cement foundation to get that result. Thank you.
So, thank you so much, Ibrahim Sagna. Thank you so much. And I love those sound bites. I wish I could just have them on television and just make it all resonate across the country. Stop looking outside. Stop importing and eat what you grow and grow what you want to eat. Thank you so much. But again, in the last 24 hours we saw from S&P, and I'm talking directing this to Sukhi from ASA, by the way, the S&P Global report for 2021 outlook, speaking to the pressure that will be within the global banking systems over the next 3 years. That's what the report says. In particular, 6 African countries were mentioned as will be most pressured in terms of the banking system: Nigeria, Tunisia, Morocco, Egypt, Kenya, and South Africa. Of course, the level of impacts across these countries will be different. So when we talk about, and Dr. Sagna is talking about the need to get innovative funding and financing and issues relating now to cross-border payments, Mastercard is involved. Vaughan needs more funding. It needs as much more support as it can get. Ibrahim Sagna and the partners and others in Afrexim are looking for ways to also improve. What are your views about cross-border payments? How do we get this to those who need it very quickly, in particular smallholder farmers and others within the agricultural value chain and supply chain in Africa, to mitigate the impact of COVID-19?
Yeah, thank you for the question, Boason. So ASA is a cross-border payments facilitator. So our role is to help businesses with their cross-border payment needs. Now, at a time like this, with COVID happening, and we're in the midst of a global pandemic, we have done a few things to really try and keep the customer in mind and keep the customer at the heart of everything we do. The first thing is to prioritize, right? So what payments are most important for our businesses? Medical supplies, emergency, food security, all of these are extremely, extremely critical. So we've adapted and prioritized these payments for our businesses. The second thing is being flexible. We need to work with our customers' needs. So if there is a business that had a different type of purpose or type of payment in the past, and now they've come with a new document or a new compliance requirement that they need to make a different kind of payment, we have to adapt our framework of compliance and treasury and liquidity and see how we can fit the customer's needs and service that client. And I think the third thing is innovation. After we've secured these first two very basic fundamental approaches, the third thing would be innovation. How do we innovate in this space, and how do we get better at cross-border payments? So something that we've seen really adopt and pick up in the last 8 months since the pandemic officially started is digital payments. We've seen an uptick in a lot of businesses asking for more liquidity, digital methods of payments, because they simply can't go to a branch in person and get a payment done. So they're looking to more of these online methods versus the traditional methods that they were used to. And I think all that's really happened is the innovations accelerated, and it's really helped us all think in a different paradigm.
Sukhi, thank you so much. Just about to ask specifically to Nigeria and just think through some of the central bank regulations around FX and all that. And I'm sure Von Kemedi can bear witness to this, changing almost on a daily, if not hourly basis in terms of with the central bank trying to manage shortage of FX liquidity. Of course, Dr. Sagna spoke about that earlier in terms of how commodity prices, collapse in commodity prices, exports, and all of that has impacted a number of commodity export countries on the continent. So with Nigeria, for example, putting a whole lot of new measures every day in, day out around the FX market, how innovative or flexible are you getting under circumstances such as Nigeria's?
Yeah, that's a great question. I think in a situation or a market like Nigeria, you have to really understand local regulations and work with what the central bank is bringing to light every day. And so for us at AZA, it's always keeping an eye on what that local regulator is saying or doing and making sure that we respect those guidelines. What we're trying to do is offer some innovative solutions, offer some digital solutions, but do it within the framework that's acceptable. So I think it's really important for us. We have a dedicated treasury team and a risk team that looks at this every day and builds our model based off of what the larger local regulation is saying and doing. So for us in a market like Nigeria, we always have to keep that in mind. And I think there's still plenty of opportunity to do that within an ever-changing framework. And it goes back to my point about flexibility, right? We have to adapt not only within what our customers are asking for, but we also have to adapt within the larger environment and within the industry.
Okay, well, we got a few questions coming through from participants, and I have just about one or two, three questions to all of you, my panelists, 4 of you. Thank you so much. Just first one, I'm just going to ask Lois very quickly. It's about the kind of momentum that you have seen towards digital payment systems. How is this evolving at Mastercard? Sorry, let me take that again. Lois, can you hear me?
I can't hear Boason. Can you guys hear me?
We can hear you.
We hear it.
I hear you.
Okay, just a quick one. Okay, Lois, I guess you're back now, right?
I can hear you.
Thank you. I guess we lost each other momentarily. My apologies. But my question was, at Mastercard, what kind of momentum are you seeing towards digital payment systems that will help take opportunities in disruption, help broaden and sustain supply lines outside the traditional banking systems that we've seen so far, some of the creative and innovative ways that Sukhi at AZA just spoke about?
Boason, was that for me?
Yes, madam. Would you like to speak to that?
Yes, I missed a little bit, but I think you wanted to know the impact of innovative financial services that are outside the traditional banking system.
Very correctly. Yes, madam.
Okay,
yes.
So in all of our interventions, we have tried to incorporate that because part of the thematic areas for Mastercard Foundation includes financial inclusion. So it's a very important aspect of our interventions. So in designing and co-creating interventions with our partners, financial inclusion, the outside the brick and mortar type.
Okay, so my apologies. I guess we're losing Lois very momentarily there. Let me ask you, Vaughn. I'm sure you can hear me. Dimieari.
Yeah, yeah.
Yeah. So how have you been impacted by some of what Sukhi has talked about, prioritizing, being flexible, being innovative, keeping an eye on regulatory environment? Like I said earlier, Nigeria, the central bank, the country is short of cash when it comes to FX, so it's trying to do what you call rationing, and that I'm sure will most likely impact your operations one way or the other.
Yes, absolutely. We have been adapting, and we have no option but to keep adapting to the regulations that come from the central bank. Having said that, a stable regulatory regime is always the best in many circumstances, because when challenges arise and you think that every challenge needs to be met by a new regulation, at the end of the day, it actually makes things more difficult for everyone. I would like to take on to support Lois. I knew where she was going, so I would like to conclude where she was trying to explain that the involvement of digital payment systems with all of these is actually quite important and critical. For instance, farmers, a farmer who plants only 1 hectare of rice, for instance, even at these very high prices, is looking at a revenue of about 600,000 naira or so, maybe even 700,000. That's just over, well over $1,000. But she is very eager for the payment to come immediately she takes the rice paddy to the market. And typically, when you are buying in volumes, you can't have cash, paying out cash to farmers. At the same time, you can't pay to their accounts that quickly, even if they have regular bank accounts. So that's where the digital channels come in, even for farmers that have bank accounts, so that you are able to pay farmers very quickly without necessarily issuing checks to them or instructing the banks to manually pay the farmers, which can keep the farmers waiting for as much as 1 week, not because the money is not there, but because there's a long line of farmers that need to be paid. So in fact, as part of our partnership with Mastercard Foundation, we are developing a digital payment system jointly with Mastercard Farmers Network. So that's different from the foundation and different from Mastercard itself. But we're working with Mastercard Farmers Network and the International Center for Tropical Agriculture to build a payment system that can take care of those who only have phone numbers without accounts, and also those who have accounts in various banks. This will be seamless. We'll work with the banking institutions to make that happen, and hopefully before the end of December, we should have that system ready. Ibrahim wanted to say something.
Yes, I wanted to complement this through the permission of our chair, Boason, to say that we'd love to partner with you guys, Lois and Azza, because one thing I forgot to mention is the bank in its innovative strides and the platform strategy that I alluded to. We erecting a platform called PAPS with the African Union, which you may have read about. This stands for the Pan-African Platform for Payment and Settlement. So I think a lot of points were made on payment, but the other part of the equation is settlement. So we are putting together a platform that's solve both the settlement issue and the payment. So since a lot was talked about on the digital payment space, what we'd love to do is to partner with your good selves after the webinar and find avenues of collaboration, because this is a continent-wide effort, right? And I think minds need to realize that digital infrastructure, which is really the future and what is making the prevalent present, whether you look at Zoom that we're using right now, or whether you are using Airbnb, the old infrastructure and whatever we've known has come to change by new players that in terms of market capitalization are even bigger than their predecessor in the industry. And it's only from not recreating the wheel. I think we need to get collective minds to be disciplined about not recreating the wheel and seeking collaboration. Most big payment plays that are happening today don't come and try to recreate. They come, they partner, and whenever there is a void, they create. So in this effort where we're trying to tackle 51 countries, we don't necessarily seek to come in each place and recreate. Partnerships are the path we are seeking to pursue. But one thing you need to understand is, as a platform, we are not doing this in serendipity. It's not accidental. It's because as a bank, we are owned by 51 central banks. So the central bank in each country is a shareholder with us. Now, our modus operandi is to do loans, but we never do a loan and just pass you the loan to Lois. We will need a local bank in that country to take the dollars from us and pass it on to Lois. Because of that, we have 3 levels for lending, and there's 3 layers of security. So when Lois pays to that local bank, then that local bank needs to remit the fund back to us. So the first level of risk is Lois. If Lois fulfills her obligation of payment, she remits to that bank. Now that bank, because of what we've discussed, which is the FX shortages, can be tempted and say, this Bank of Cairo, I just read their press release. They just got $250 million of net income. How about they don't need the cash? Let me sit on it an extra 2 months, right? They're like, those guys don't need dollars. We don't have dollars here. The central bank is sitting on my neck. Why pay those guys? So at that level, we have a third level of security. Those banks' bosses, which is the central bank, is our shareholder. So if he's tempted to misbehave, we have that access directly to the central bank governor. So that those 3 levels of the building are very securitized. And you'll see in our story in our annual report that as our balance sheet is growing from 2016, we had $6 billion in balance sheet. Now we have 19. Literally went from 6 billion. I mean, the pace is really big, right? But our NPL is going down. It's really that 3 level of security that I'm talking about that enables that. So, but it's that 3 level that we want to use in settlement. Because a bank in Angola may not want to transact with a bank in my country in Senegal. They say, we don't know anybody in that country. Why you want me to do a loan there? We can come in the middle. I say, don't worry. You buy our guarantee. You don't know the Senegalese bank, this guy Ibrahim, you don't know him, no problem. No wahala. Here's the guarantee. Do the trade, do the settlement via me. If anything goes wrong, I will make sure that I recover the fund, but you are sorted. So we're using our own architecture to enable the digital settlement to happen. And we're doing it with each central bank, one country after another. So the key is to really work also in partnership with parties like yourself, because we should not be trying to fully recreate the wheel. given all the great efforts you guys are doing on the ground, I think it's important that the continent realize that whether you go in Asia or in Europe, in different geography, it's using what was done before and consolidate. We need to move into a mindset of consolidating our forces and building our own narrative.
And fantastic, Mr. Sagna. Thank you so much. Yvonne, you have a minute very quickly.
I think it's incredible what the bank is doing, really taking for its step that mandate of accelerating intra-Africa, not just trade, but transactions and businesses. That's really wonderful. And I congratulate the bank for all the extra infusion that it now has to even further accelerate that mandate.
Thank you so much. Just a quick one, and thank you so much, Mr. Sagna, in terms of these points you've mentioned and tried to explain what this new system of settlement and transactions and payment system will be moving forward. I'm sure that the EFCFTA, this is going to be a real game changer as the Afrexim Bank is putting it together. There's been one big naughty problem as far as our continent's food production is concerned. Supply chain, whatever it is. And that's what Boyega Lawanson is asking us as a question. One of our participants says, looking about what you call food waste upcycling, the problem of food waste in Africa. How do we address it on the continent? What can be done? What new direction in terms of social innovation? What can be done? He's asking this question of our panelists. Who would like to speak to this first? Yvonne?
Yeah, I'd like to go.
Okay, Vaughn, you can go ahead. I'm sorry, my apologies.
Okay. Thanks a lot. This is a very critical issue, and interestingly, it's actually a supply chain issue. It's a supply chain issue. Sometimes people describe it as post-harvest problems, but actually it's a supply chain issue. So it's very critical that smallholder farmers who are responsible for more than 90% of the food production in the continent are fully linked with the processors and the markets. And this can actually be enhanced by digital solutions. Sometimes people say because of the low rate of numeracy and literacy in Africa, that it's very difficult for digital solutions to be as successful as in other parts of the world. But that's actually, yes, it is a challenge, but it can be addressed. So in Alluvial, for instance, the method by which we have been able to work with large numbers of farmers is by creating what we call community blocks. So each block consists of a minimum of 500 farmers, with a lead farmer and an extension person there. That means that you are able to bring 500 farmers, even 1,000 farmers as a block into a supply chain. And it will not be relevant whether every one of these farmers can operate a sophisticated app, you see. So you're able to then link them up to that supply chain. And we're actually, as part of this collaboration with Mastercard Foundation, building a digital extension service. This digital extension service will be reaching 1 million farmers in Nigeria alone. It helps the farmers through USSD codes to access basic information based on lean information provision. In other words, we are not trying to provide all the information in the world, but the most essential for the activities of the farmer. So the digital solutions are still very, very relevant in this case.
Oh, interesting. Thank you. Mr. Sagna, your comments briefly.
Well, he stole the word out of my mouth, so it's great to think that we think alike and there's great path for partnership. What I was going to add to that is over it beyond the digital aspect of things and the problem of supply chain that he's eloquently depicted. we need to also bear in mind that another issue to resolve in parallel is the one of borders. So one of the significant problems for what the question alludes to, in order to be able to solve that problem, you need to solve the challenges at the borders. Because what we fail to recognize and remember is the continent, although it's 54 countries, in the entire globe, there's probably 30 and so much landlocked countries in the globe. And out of 34, 16 are Africans. So it tells you the prevalence of landlocked countries per ratio in the globe. So we have the most case of landlocked countries. So those countries that have excess, even the exercise of digitally, when you solve the problem digitally, the actual procurement and the actually movement of the goods is a massive issue. The continent has cost in terms of moving things from one border to another that tends to be 150% to 9 times more than different geographies in terms of cost. And then in terms of time, we don't even go in the championship. We basically, I think, we just get elected champion every year in terms of where it takes the most time to move goods. So at that level, as a bank, we're doing some programs around borders, providing some guarantees. We have some trade facilitation within our intra-African trade program, which is the arrowhead of the bank. A lot of the things that I've been pointing to today, obviously, it's important to highlight that they're really the brainchild of our President Orama, who's taken the helm in 2016, and where you can see obviously a lot of the growth in balance sheet, in revenue, but these initiatives are really critical in the view of our leadership to change the continent. So we need to recognize the digital opportunity that my colleague has so well put in the front of us, but also remember the challenges we have historically and try to solve them with the continental free trade and other initiatives.
Okay, thank you, Mr. Sagna. Of course, if you look at our chat room right now, a few comments are coming through, and there's a question which I'm going to put out there very quickly within the limited time that we have. But in terms of the food wastage, Lois is putting some coming through, and she talked about how to encourage, how to reduce food wastage can be significantly improved through proximal processing, encouraging the setting up of community processing centers and clusters. I'm sure that will work in a number of African countries. That's the way the level of processing at the rural level can capture the produce and enables production of products that can be obtained, off-taking further to larger processing plants for next level processing. I get that. Small processing, whatever plants close to the farms, then you can move to bigger processing, warehousing and others a bit further off to look at the issue of logistics, infrastructure, roads, and what have you within the African space. And I think this will really work with what Mr. Sagna talked about. The landlocked countries within Africa is a major issue for most parts of the continent, and that's quite very opposite. Very quick question from, I want to ask Sukhi one question. What do you think the longer term sustainable solutions will look like? But I got this question for coming through a company by the name Gletec. It says, they said they're working in Benin Republic. And I think this goes to Mr. Sagna about what digital solutions can you provide? Let me ask Sukhi that question. What digital solutions can be provided in Benin Republic?
Yeah, so we have technology, and it's an API that can accommodate business to consumer payments or business to business payments. And what we've done with this API is it's evolved over the years. We've taken feedback from our customers, we've taken feedback from partners, and we have developed features on the API that make it more usable and more client friendly, but also it accommodates different types of payment needs and different types of payment flows. I want to circle back really quick to Vaughn's point about food wastage. I think, one of the things fintechs could do a lot better and continue improving on is really understanding a business's true problems and their needs, and listen very carefully to like what the exact issues are. Because sure, we can solve a problem at hand, which is how you make this cross-border payment, but I think there's several layers there as to how can we solve like a bigger problem. And to do that, fintechs, I think, need to listen and partner. And just to bring in Ibrahim's point, interoperability is very important. We need to work across the fragmented systems in each country, but also work with the regulators and work with the banks to grow the ecosystem, right? That's essentially what our goal should be, is to grow the ecosystem, get more partners in there. So yeah, in terms of what innovations are there, especially when it comes to Benin, we do have an API. We have other solutions that could work for that market. And I think what one of our focuses is for the next, let's say 12 to 18 months, is to really figure out this Francophone, French-speaking West Africa region, how much interoperability can take place there. And we are putting a lot of infrastructure and effort towards that.
Thank you so much, Sukhi. Just one quick question for Ibrahim from one of our participants, Orich Doso is asking, very appreciate the partnership you talked about, Ibrahim, but how does it really work? How do you go about it?
So so we as a bank have a heavy load towards partnership. So we like to define our strategic approach around two main denominations, one being intra-Africa trade, the other one being industrialization. We still remain the trade bank of the continent, but the two key pillars of our action today are focused around those two chapters. So we think that those chapters getting greater attention, greater resolution will change the landscape. So at that level, we are working, we're structured as a bank with different departments, but those two content pieces are prevalent. And we have members and teams that are spending time doing trade facilitation and partnerships. So there is a constant approach to be receptive to new relationships, try to develop them, and try to yield a transaction out of it. And if the transaction cannot happen with us, we tend to direct the party to the adequate party. So actually, my function at the bank is to run the investment bank, where any project or transaction seeks a solution which can be provided either by the bank or an external party. So basically, literally treat our bank as a pharmacy, and I just have a function of a doctor. You could take the medication with us or somewhere else, but fundamentally, we will show you a path to cure.
Interesting, Ibrahim. You either do, if you don't do OTC, over-the-counter drugs, then you can just do prescription drugs and ask Sukhi at Azar or Lois.
Absolutely. Absolutely, and that's why I
love division of labor. I just like it. No better way to explain it. Thank you so much, my panelists. It's been very great to have all of you here for the last 1 hour. Thank you so much, Ibrahim Sagna, at head of Global Head Advisory and Capital Markets at Afrexim Bank, based in Cairo, Egypt. Thank you so much. Dimieari von Kemedi. Thank you so much. The Alluvial man. Thank you so much. Great job you're doing in Nigeria. We appreciate that. And of course, Sukhi Srivastan as head of Inbound. And of course, Lois Sanke. Lois, thank you so much. Program Lead Agriculture at Mastercard Foundation. Thank you so much. We appreciate all that you're doing. Thank you, our panelists, and for members of the participant. Thank you so much, everyone, for being part of this conversation. Supply lines in COVID-19 era, opportunities in disruption. Never waste a good crisis. That's what it is all about. Thank you to the team at ASA in particular for your analysis and organization of today's event. Of course, we'll discuss many issues relating to COVID-19, supply lines in Africa, what innovations, flexibility, and keeping an eye on regulation is all about. How can we stop food waste? How can we build new bridges? But importantly, what AfroExim is also doing across the 54 countries of the continent. We appreciate that. And of course, the private sector participation in making sure that the wheel of progress in terms of supply lines are well oiled, which AfroExim is bringing in on one side and Mastercard Foundation also at the other side. But of course, all of this going through ASA as well, which is a non-bank FX operator committed to supplying liquidity, connectivity, and treasury solutions to every part of the continent and elsewhere around the world, looking to support growth in transactions in and across Africa. Of course, their primary product is the BFX product that you can get more details if you just log on at tradebfx.com. Once again, tradebfx.com. Thank you so much. Cheaper, faster, and more easily. Of course, we'll be posting highlights of today's webinar as a webinar on Twitter at @ASA_Africa. AZA_Africa. Thank you, everyone. And please interact with us there on regular basis. Thank you, everyone. I am Boason Omofaye. Thank you for having an engaging conversation. And I'll see you next time here on ASA webinar. Bye for now. And
thank you.
Thank you.
Thank you all.
Thank you.
Pleasure.